contact us at National VA Loans. It's 855-956-4040. Check us out online at www.nationalvaloans.com or click one of these two spots right here and you can subscribe to our YouTube channel. This is where we put out all the information so you can stay current with all the up-to-date information from the VA. Today, guys, I want to talk to you about VA cash out and the ability that you have right now because of the amount of equity you've gained over the last few years. You know, the last couple of years, I mean, my God, there's been a ton of stuff go on, whether it was, the pandemic or if it was houses selling at record pace, rates being at record lows. And so there was a lot going on that affected the mortgage industry and the mortgage market as a whole, and especially for you veterans. One thing we hear a lot of is, I've got a really great low interest rate. I don't want to get out of this thing to pay off debt. I want to keep my low interest rate, and completely understand that. But, one thing that we look at in the mortgage industry is we kind of dig a little deeper. We kind of dig into it to figure out exactly where you can save money, where you can use your house as a financial tool, which I think a lot of people really need to look at a little bit more, because while it is a home for you to live in, for your family, it's and a little bit of security, because owning your own home is definitely a secure feeling. It's also a tool that you can use and something that you can use to better your life now and in the future. So I want to break down an exact. I mean, this is literally the exact scenario that we're working for a veteran right now. He gave me the okay to use it. I'm obviously not going to use his name or any of that, but he did say it was okay to use this scenario because he's pretty damn excited right now. So I'm going to break it down, and I really want you to get into this and kind of understand and maybe apply it to your situation and some things that you may be able to do with your mortgage and ways that you may be able to put a little bit more money in your pocket at the end of every month. I think that's what we're all looking for, is how do I have a little bit more money in my pocket? How can I have a little bit more savings? How can I have a little bit more security? And I think that's what this loan will do for you. So without further ado, we're just going to kind of jump into this thing. So I've already written it all out here because, my gosh, it's a lot to write. And I'm sure you guys don't want to look at the back of my head all day. Although sometimes some people may say that's the better side, but either way. All right, so this gentleman right now has a mortgage at $94,000 is what he owes on his current loan. It is, keep in mind, at a sub 3.5% interest rate. I'll just tell you, it's at 3.25% interest. So he got it at a really good time, and it's a great interest rate. Now, I also want you to keep in mind, this mortgage is not on a VA loan. When this borrower bought his home, he was only able to do it as a conventional loan because of the condition of the house. It had a few things that we're going to pass on VA inspections, so they went ahead and did it as a conventional loan. So keep in mind that payment at $813, the $94,000 he owes, the $813, which is the payment. That $813 includes taxes, insurance, and also includes mortgage insurance. Whereas you veterans out there that have ever watched any of this or that know this, on a VA loan, you don't have mortgage insurance. So in this case, this gentleman does. Now, let's really get into this. So he has an installment loan. And when I say installment loan, I don't mean a car loan. Car loans are completely different, in my opinion, because you are securing those with an asset. Now, it's a depreciating asset nonetheless, but it is an asset. So I've taken the car loans out, and we actually aren't paying any of those off for him. We're doing an installment loan. It was about $29,161, but notice the payment on that, $888. That's a pretty sizable installment loan, okay? And that's a 60-month kind of note, so he's got a pretty good sized loan on there. Next is a smaller installment loan, basically just a signature loan, $34.47, $258 a month payment. Now, what you're thinking, or at least what I was thinking when I pulled this up, I'm like, okay, well, $258 a month at $344.47. He's probably not going to have this very long, but then the more I dug into it, he still has almost 30 months to pay on this loan. I mean, go ahead and do the math. $258 at 30, I mean, you're spending way more on this. So imagine what the interest rate is on that. I don't know, I didn't ask because I can kind of guesstimate what it is, and I know it's high. So next we got Capital One, or we got some credit cards. Now he does have 4 credit cards, 2 of them are Capital One, 2 of them are Chase. Here's your balances, and then here's your payments. So $49.21. This is not a lot of credit card debt. Now don't get me wrong, it is credit card debt, but right now as a nation, as a whole United States of America, the average, well, the total credit card debt is over $1.2 trillion. So that's unsecured credit card debt that citizens of the United States hold. That's an average of $7,000 per card holder. But if you look here, we've got almost 5,000, 8,000, 12,000, 13,000, so about $13,500. So a little bit above that average of what's typically out there. But still, when you think about it as a whole, 1.2 trillion, my goodness. I mean, you think about credit card holders, and I'm sure most of us are credit card holders, or at least have one for an emergency. If you think about it and you don't owe anything on yours, well, someone else is picking up that slack, and they definitely owe on theirs. So we're paying those off, and you can see the debt. So total debt, and I'm going to call this all unsecured because, again, these are installment loans that aren't attached to vehicles or attached to something that, a home equity line of credit or something along those lines. So it's about $45,849, but most importantly is the payment, the $1,573. I mean, because to me, that's what we all are concerned with, is how much money is going out versus how much money is coming back in. Well, right now he's got an extra $1,573 that's going out on the items that we're able to pay off, plus the mortgage of $94,813. So you have a total of $2,386 a month in total monthly debt. So if you make $5,000, $6,000, $7,000 a month, that's a pretty staggering number because you got taxes and insurance, and you got kids, and I mean, man, God, kids are expensive. Jesus. So all this stuff adds up, and it adds up over time, and it almost becomes like a noose around your neck where it just tightens and tightens and tightens, and you've got to figure out how to make it through. And a lot of, just like this gentleman, this veteran, he is maintaining and he is making it through, but he is looking for a little bit of breathing room. And I can't say as I blame him, I would as well. So I'm really glad he gave us a call. 855-956-4040. Any of our VA specialists are here for you. So let's take a look at the new loans. So we've got a new loan of $154,000 and a new mortgage payment of $1,230.65 a month. That includes taxes and insurance, but not that private mortgage insurance, because we are going to do his new loan on a VA loan, which is what he should have, because he is completely VA qualified. He has VA disability, which means he's exempt from the funding fee. So, and of course, VA, no private mortgage insurance. So this $1,230.65 is actually what his new mortgage payment is going to be. Now you're probably saying, well, yeah, but his old payment was only $813. You're right, it was. So this is definitely going up. But look at the amount of savings, $1,155.35. Let's just knock the cents out. So $1,155 a month. So that's savings. So right now he's got this much coming out of his pocket. Now he's going to have this much, because all this goes away. It's all gone. Okay. It gets paid off. It goes away. Now, of course, the credit cards can be used again, but that's where we come in. We kind of have not so much a counseling session, because that sounds weird, but we kind of talk about it and say, you don't ever want to get in this situation again, obviously. So what I would suggest doing is, selecting your highest balance card, or asking them to increase your balances, or increase your limits once you pay these off, and selecting the highest one, and then focusing on that and keeping that one for emergencies. Or, for me, I use mine day to day and then pay it off at the end of every month. So similar kind of situation, and that's something we always talk about, because if you don't want to get back into that problem where, back in the mid 2000s and late 2000s, 8, 9, 10, that's where a lot of people got. They paid off a lot of debt, but then they ran that debt back up. So you don't want to get back in that situation. So I would suggest, what I did suggest in this case was to make sure that you get one of these, the highest limit you possibly can, have the credit provider raise your limit up, and then at that point, just use that card and focus in on that and have that for emergencies. All right, so we're saving almost $1,200 a month, $1,150 a month. Now, what I've sit down and keep in mind, this is at a higher interest rate because interest rates are higher currently. But what we sat down and talked about was, what are your future goals? Do you want to pay this off? What are you looking for as far as, other than, put more money in your pocket, which that's kind of what we're all looking for. What are your goals? Well, he wants to pay it off. He would like to be debt free in 15 years. And he would like to not have to worry about, where his next dollar's coming from, or how he's going to pay this or pay the mortgage or whatever it may be. So what he's going to do, and this is pretty cool, he is going to take just a portion of his savings. He's going to save $1,155 a month. He's going to take $500 of that. All right, so he's still saving $655 a month. But he's going to take $500 of that and he's going to apply it back towards his mortgage. The reason we settled on that number was I asked him pretty clearly, what is it? Right now you're spending this much money a month and you're comfortable. You're okay. You're squeezed a little bit, but you're okay. If you had an extra $600 in your pocket, would that make life easier? Absolutely, he said. Of course it would. All right, excellent. So if we take that extra $500 a month and we apply it back towards our mortgage, all right, we have put additional principal towards it every single month, he is going to pay his house off in 155 months, all right? Think about that. We're doing a 30-year mortgage, all right? But he's going to pay his house off in 155 months. That's what, about right at 13 years, give or take. Guys, he's going to be debt-free, house debt-free in 13 years just by doing this little thing. And it's nothing more than shifting money, okay? This is where I talk about keeping and using your home as a financial tool. He is shifting money from one side to another and putting it in something that's a secure, fixed asset that's going to increase in value or historically increase in value over time. And he's going to pay that thing down at a fixed interest rate. Okay, he's going to pay it down and pay it off in 155 months by sticking to this plan. Now, here's the nice thing about this is, listen, I understand life happens, things come up, things change. Like I said, with kids, my God, you never know what's going to happen. So he's not going to be locked into that high or that extra $500 a month. He is going to have to be diligent about paying that extra money every month. I believe he will. Most of our veterans and active duty service members are pretty awesome about those kind of things. They know how to focus and drive into something like that. So he's going to pay this thing off in 155 months. It's going to save him thousands upon thousands of dollars of interest. All right. I started going through a whole diagram on everything on this, and it got a little bit sloppy up here on the board. So if you'd like to know more about this, or maybe more how this would work in a scenario for you or in a situation for you, give us a call, 855-956-4040. Of course, check us out online, nationalvaloans.com. But most importantly on this, you've got equity right now. You have equity, and there's no reason to sit and spin wheels and spend time and be frustrated and be tight as all get out on your finances if you have equity that could possibly save you some money in other places. But again, your house is a financial tool. Let us show you how to make it work for you, okay? 855-956-4040. Any of our VA specialists are here to help answer questions. They're always excited to do this, especially when it comes to cash out, because boy, this does save you a lot of money. And in the long run, that's what we're all looking for, is to save a few dollars. So again, 855-956-4040, nationalvaloans.com. And if you're excited and you really want to see what we can do for you, go to nationalapplynow.com, fill out an application, one of our VA specialists will get back to you. Folks, thank you for listening. Thank you for your service, for our veterans, for our current active duty people. Be safe out there. Take care of yourself. Thank you so much for your service, and God bless you.